Alright guys, in this episode of Should I Invest, we're going to be talking about Ford Motors and if this is a company that you guys should invest in the long term. Without further ado, let's go ahead and jump right into it. But before I do so, most of you guys watching my channel are actually not subscribed. So go ahead and smash that subscribe button, like this video, and comment down below what video you want me to do next. Alright, so without further ado, let's go ahead and jump right into it. Okay, so I have my handy dandy MarketSmith tool right here. It's going to give us all the information that we need to make a sound fundamental decision on whether or not to invest in this. I have my handy dandy Excel sheet that's going to fill all our little data and see if it's going to be a pass or a fail. Okay, so let's go ahead and get started. So let's pull up our Excel sheet. Let's plug in Ford. I don't know why it keeps doing that. All right, perfect. So right away we have EPS green and PE is green. Next thing we need to look at is return on equity. To do that, we're going to come here. We're going to look at this box right here, and return on equity is 17. Okay, so right away, nice number there. 3 green boxes right out of the gates. Next thing we want to look at is the total debt to total asset. So to do that, we're going to come down here to Yahoo Finance. We're going to go to balance sheet. And we're going to come down to total debt to total asset. Okay, so we're looking at right here, total assets. We have 2558. We're going to plug that in here. And then let's come down to look at total debt, 212. Perfect. So that's a 1.2 time we can pay off the total debt. So our assets can cover our debts at least 1.2 times. Now let's look at current debt and current assets. So we're going to look at current assets right here. Current asset, we're going to plug that in. And then we're going to look at total current debt, which is 96. Let's plug that here as well. And again, we have 1.2, meaning our current assets can pay off our current debt at least 1.2 times. So that's great. Next thing we need to look at is operating income. We're going to go to the income statement. We're going to look at total revenue right here. We're going to plug that in. And then we're going to look at operating income. Okay, operating income is right here. And this number is actually going to be a little low, 4%. We want this at least above 15. So we have our first red. Next thing we need to look at is cash flow. So 2020, cash flow was 18. 2021, it was 9. 2022, it was 13. And the trailing 12 months, meaning it's 2023, it's 5.5. So from 2022 to 2023, it's actually increased. So I will put that as an increase here as well. Okay, and you can see right away the sheet has already given it a pass. Okay, so it will be interesting to see what's going to happen on the next 2 boxes here. So what we want to see how much management owns. To do that, we're going to come here. We can see management owns 1%. Obviously, a very big cap name, so it's hard to own more than 1%. And then we're going to look at funds. Are they increasing or decreasing? To do that, we're going to come to MarketSmith again. Take a look at fund ownership on the side, and let's take a look at what's happened. So we have December 2022, 17.58, 17.26, 17.10, 17.8, 17.2. So not so much an increase or decrease. I would say it's fairly flat here. So let's see what happens. If we put increase, obviously we still get a pass, and if we put decrease, we still get a pass. So this number is not really relevant. Let's take a look at here. What happens if we change this? So that fails. Okay, so it's hit all the boxes here. A lot of good numbers here. Cash flow is a little bit of a problem as it was decreasing coming into 2022, but since then it's rebounded. Okay, so everything looks okay here. The only other thing is the income statement. Okay, does it balance? It does, but we want it somewhere close to 15. Okay, so let's look at the chart now and see what the chart is telling us. Obviously here, looking at the weekly on Ford, a name that's gone up to 25.86 back in 2022, early 2022. Okay, and then since then, with the market pullback, it's pulled back and it's been in this range of around 10 to 14 since most of 2022. Okay, so if I was to say, start a position, you're probably looking at somewhere around here, 12 to 10. That's a good average place to start. And then you can use this low as an area to add to. Okay, and if it doesn't, right, if it doesn't drop, at least if you get in at $12, your upside is close to 18, maybe 23. You're looking at a pretty good return. All right, so A little bit of a safer name, obviously, is Ford. It's been around for decades and decades and decades. It doesn't have your parabolic moves like some of the other names, so maybe a little bit more conservative investment for the long term, but definitely something to keep an eye on. All right, so I hope you guys did find value in this video. If you did, please subscribe, comment down below, and like the video. And also let me know what video you want me to do next. So Ford was actually a comment from one of my subscribers. If you guys want me to do a specific stock, comment it down below, please. No pennies, no sub $5 stocks. Comment it down below, and I will be more than happy to do a video for you guys. Again, thank you for watching, and we'll catch you on the next one.